What's going on, everybody? It's your boy Drew IQ. Welcome to another episode of Winners Win. Today we're going to be talking about the 4 different asset classes that you need to know about to start on your investing journey. Please go ahead, like, subscribe, and without any further ado, let's get right into the video. Alright guys, so the first asset class that we're going to be talking about is just going to be building your own business, or investing into someone else's business. Meaning, maybe you're an angel investor, right? Maybe you're on Shark Tank like Kevin O'Leary, right? And maybe you want to invest into another company. You could also make money that way, but I think the more popular route for a lot of people here is just to start your own business and start gaining income from your business. And for me personally, I have an entertainment business where I'm making money from my 3 different YouTube channels, as well as my Twitch channel and my TikTok and Instagram. So anything I get from my entertainment business, that goes towards this asset class. And it's very simple, guys. It's literally, you can either build a business or you can invest in someone else's business. This is the first asset class, and I think it's probably not the easiest to get into, so a lot of people are not going to be probably in this asset class currently. And if you aren't, that is okay. We're going to be talking about other asset classes that are easier to get into, especially for a lot of those people that are scared to start their own business and start that journey. So if you don't want to build your own business, don't worry. We're going to talk about some other asset classes that you can start investing in. That is one thing I do want to talk about. Each asset class, you don't have to invest in. A lot of people, they find one asset class that they enjoy more than the other ones, and they just kind of double down on that one. Personally, I think you do want to try and diversify and have all asset classes if you can. But if you don't enjoy the other asset classes, or for whatever reason you just don't want to invest into them, at least you're investing into one or more asset classes. It could be worse, right? You could be like everybody else and you could just have a bunch of liabilities and no assets at all. But yeah, guys, that's going to be it for this business. Let's go ahead and move on to our next asset class. Alright, so the second asset class we're going to be talking about today is paper assets. And this is the most common asset class, which is going to be stocks, bonds, mutual funds, CDs, certificate of deposits, savings accounts, money markets, cash on cash equivalents. So anything like that is going to be this asset class. And it's the most common because the barrier for entry is really low. Right? You can just go set up a brokerage account at maybe Fidelity, Robinhood, TD Ameritrade, set up a brokerage account and invest in some stocks almost the next day. It's very easy to get into, and you don't really have to know a lot. You can just go buy, like I said, some Vanguard index funds that are going to be diversified by nature. And they're going to be really easy for you because you don't really have to do a lot of homework or research like I do as a value investor who buys individual stocks, right? So there's 2 different ways that you're going to be able to invest into stocks if you wanted to buy stocks, right? That's going to be doing the individual investing, buying individual stocks, or buying an index fund, which has a bunch of managers who manage the index fund for you, so you don't have to do a lot of work. You just buy the index fund and get at least 7-8% annually on average, which is great. Now, a lot of people buy bonds in this asset class. I'm not very big on bonds, mainly because I'm a little younger, so I want to take on a lot more risk. And I hate seeing 3-4% return. Like anything below 7% to me, I don't want to see it. The only thing that I have getting less than that is my savings accounts. And that's because savings accounts aren't really beating inflation right now. So in this asset class, yes, technically, savings accounts and these money market accounts are considered an asset, but right now a lot of these accounts are not beating inflation. The interest rate that you're getting at your savings account right now is going to be lower than the inflation rate. So if your money is in a lot of savings accounts currently right now, 2022, they are losing money. So currently right now, savings accounts, money markets are kind of liabilities right now. So if you are going to invest in this asset class, I would mainly stick to stocks and bonds, mutual funds, and certificate of deposits. that being said, the best part about this asset class is what we call its liquidity. We love liquidity, meaning that we can get our money almost immediately with this asset class, right? We can buy a bunch of shares of some stock, maybe Tesla for example, and then the next day we can sell our shares and make a gain and get our profit, right? So it's very liquid, meaning we can get our money back almost immediately. For example, if we had our business, like our first asset class we talked about, we can't just just tear down our business, get rid of our employees. It's not as liquid. It's not as easy. It's going to be a whole process. We're going to have to go through maybe bankruptcy. It's going to be a lot more miserable than, just pressing a button and swiping up on Robinhood and selling our shares of stock. So the best part about this asset class, and it's also why I also encourage a lot of new investors to start in this asset class, is because it's very easy to get into, low barrier of entry, right? You just get a brokerage account, start buying some stocks or some, ETFs and index funds. Very easy, you don't have to know too much, especially if you don't want to do the individual stock investing like I said. Alright guys, so that's pretty much it. Paper assets. We're going to be making money off the appreciation of when we sell. Hopefully we're going to be buying low, selling high, and we're going to be getting that appreciation. But you can also make money in this asset class off dividends, right? A lot of these stocks are going to be paying dividends. I'm a huge dividend investor. I mainly buy dividend stocks and growth stocks. I don't do penny stocks anymore, don't do meme stocks anymore. I have a little bit, I had some AMC. I have messed around with some of those, but I'm mainly just growth stock and dividend stocks because I love cash flow. I'm like a huge cash flow investor, guys. So I love dividend stocks. So in this asset class, we should be getting appreciation and we should be getting some cash flow, hopefully from some dividends. That is going to be our goal in this asset class. And that's going to be pretty much it, guys. There's one other thing I did want to talk about in this asset class is you can use leverage. A lot of people think you cannot use leverage in this asset class, meaning you can't, get a loan and buy some stock. But there is a thing called margin investing. I don't recommend anybody use it as a new investor, but if you're an experienced investor, it's a very useful tool which you can basically take out some money or a loan and you can use this money maybe and pay maybe like a 2.5% interest rate on Robinhood right now, which is really low. But if I can make 7-8% on average in my stocks, then I can make that difference of 5% and use that leverage. So you can use leverage. It's very common that people think you can't use leverage in this asset class, and only real estate you can go get a loan and use leverage. It's not the case. You can use leverage in this asset class, and I did just want to add that little tidbit. But yeah, guys, that's going to be enough for this asset class. Let's go ahead and move on to our next one. So the third asset class that we're going to be talking about today is going to be real estate. Now this asset class is extremely popular, mainly because it has a lot of tax advantages. So this asset class is really common mainly to take advantage of the tax purposes. But also, a lot of people just seem to love this asset class because it's really just a numbers and deal making game, right? Are you good with numbers and can you analyze, a property's numbers properly? Because if you can do that, then you know how to find a deal, and this asset class becomes a lot easier. Once you know how to find deals in this asset class, or if you know someone like a really good agent that can help you find deals, it's going to be a much easier asset class to get into. Because a lot of people get extremely scared to get into real estate, and I understand why, but it is nothing to be scared of. I do recommend, starting with paper assets first before you start getting into real estate. And if you really wanted to get into this asset class without, having a bunch of capital, you can use a thing called a REIT, which is a real estate investment trust. I have a real estate investment trust right now because I do not have enough capital yet to go get a rental property, for example. And yes, by the way, when I'm talking about real estate as an asset class, I'm not talking about your personal property. I'm not talking about your house, okay? Your house is not an asset. I have another video, go look it up, assets versus liabilities, where I discuss why your house is not an asset. But an asset is only off investment properties. So maybe a rental property where I'm renting this property out to someone and I'm getting cash flow because they're paying me rent every month, right? So just like we talked about with our paper assets, we can get money two ways, appreciation and cash flow. Well, guess what? Real estate is very similar. We're going to be getting our money two different ways. We're going to be getting it from appreciation of our properties whenever we buy our properties and these properties go up in value. And two, we're going to be getting money from cash flow from our rental properties where there's people renting out our properties and they're paying us money and getting us that cash flow. So a lot of times you are able to find properties where you can get the appreciation and you can get a cash flowing property. But a lot of different locations, it really depends. Right now in California, it's really hard to find, you know, properties that cash flow, and you're mainly going to be buying those properties just for appreciation. They're in, you know, on the flip side, there's a lot of properties over here that aren't appreciating as well, but they do have great cash flow numbers. So it's really all about location when it comes to real estate. A lot of times, right? It really matters where you're buying real estate and all that. So the hard part with real estate, it is a high barrier of entry. You're gonna have to, you know, like if you don't know someone, right? If you know a real estate mogul that can just walk you through it, yes, definitely go try the real estate asset class out, okay? If you know someone that can mentor you and help you out in the real estate sector, definitely go that route. Because the best part about real estate is it is one of the only asset classes where you can use that leverage. You can go get a loan, so you don't even need to use your own money. To invest in this asset class, you can go get a loan, use OPM, right, other people's money, to start investing in real estate. And that's why this asset class is one of the most common wealth builders. It's going to build your wealth because you don't really need to use your money or your own capital. You might need to put down a small down payment, maybe with the FHA loan of 3.5% interest, right? But you can still get a lot of money from the bank and use that leverage. So this asset class is going to be an asset class that maybe has a higher barrier of entry, but if you learn this asset class, it can pay off immensely because of how quickly you can build your net worth by using OPM and getting, you know, loans from the bank. And using that OPM wisely can really, really build your wealth extremely fast, right? So again, if you don't want to do all that homework and invest in rental properties and, you know, get some investment properties, just like I said, get a real estate investment trust, some REITs. I invest in REITs with Fundrise now for about 2 years, and I have made over 7-8%. I think I'm almost made 12% returns on some of my properties. And if I didn't explain a real estate investment trust, it's basically someone is just managing a bunch of properties for you. It's kind of like the index fund idea. Whenever we were talking about index funds and stocks, you know, buying into a REIT or a real estate investment trust, basically I'm just giving someone else my money and they're taking my money and going to invest into a bunch of real estate for me, so I don't have to manage and do all the work, right? So again, guys, if you want to do all your homework in real estate in this asset class, go ahead and do it. You know, get yourself some rental properties, start buying some other properties that are going to appreciate. But if you don't want to do all that homework, just maybe, you know, but get Fundrise and start investing into a REIT. One thing I do want to mention about REITs though, you're going to be paying a lot higher taxes on those dividends. Those dividends are going to be a lot higher tax in the REITs. And so you don't really get the tax advantages whenever you're investing in a real estate investment trust, maybe as well as if you buy your own property. So that being said, guys, real estate is an amazing asset class, really crucial. I actually think if you're using the business asset class, if you're trying to build your own business, you should definitely have real estate. Because a lot of popular businesses, like for example McDonald's, they use real estate to kind of fund their business. For example, McDonald's is primarily a real estate business. Nobody knows that. But they invest a lot of their money that they get from their McDonald's fast food chains into real estate, and they use that real estate to build a foundation of cash flow and appreciation that they can use to kind of diversify their business. And you know, it really just helps their business in the long run have that foundation and diversify in different asset classes. So now their business by nature is also having different asset classes. Anyways, if you want to, you know, get into real estate asset class, I highly recommend it, guys. It is a great tool to have. So the worst part about real estate is that it is not liquid at all. So you know how we were talking about how stocks are really liquid and those paper assets are great because we can just sell and get our money immediately. Real estate is not as liquid because to sell our property, for example, it's going to take a lot longer than just swiping up on Robinhood. We're going to have to, you know, list our property, find a buyer, and go through that process, get the paperwork signed. There's going to be a lot more work involved, and it's just not as liquid. You're not going to make your money as quick. You might not even be able to make your money at all. You might sell your property at a loss. So it's not as liquid, and that's really the worst part about investing into real estate. I'm not going to start going too far. I almost started talking loans, but I didn't want to go that deep today. If you want me to start maybe talking about something specific in real estate, maybe we can get a little more detailed in this asset class, let me know. But that's going to be it for this one. Let's go ahead and move on to our next asset class. Alright guys, so the number 4 asset class and the last one that we're going to be talking about today is going to be commodities. And commodities are basically any raw material, you know, that's real high in value that you can buy and sell, right? Kind of like a barter system, you know. So I would think, you know, oil, gas, gold, silver, copper, coffee, soybeans, guns, bullets, and even for a lot of my NFT heads out there, crypto punks, right? Anything that has a high value that you can just buy and exchange and sell for a higher value, right? This asset class, what I don't really like about it, it's mainly all about appreciation and minimizing risk. A lot of commodities are not as risky of an investment because gold by nature, it doesn't have inflation, right? The value has consistently gone up forever, but it's been at a very steady, slow rate. So I think this asset class for me is mainly just kind of a way to save your money, right? Get your money away from inflation, right? Your money and your cash is better as gold or as Bitcoin or as Ethereum or even as, you know, maybe like an expensive classic Mercedes car that holds value. Your cash is going to be better used in these other assets because your dollar bill has inflation, so your cash is losing money every day. That's why cash is not an asset, and cash is horrible to just hold on to because it's just losing money and it's losing its value every day that it's not sitting in some asset class, right? So if you have a bunch of cash, at least go put it in some gold or something that's not going to be losing value and it's going to be holding its value, right? And in my opinion, what I like commodities the most is that I don't like the government, right? So I could put my money in Bitcoin and a lot of these decentralized areas and kind of, in a way, save my money. That's why I really like commodities, because when I invest in commodities, I kind of think of it as, you know, maybe not a high, I can't say that now with NFTs, you can really make a really high return, so you can't really say that now. With some of these collectibles that people are trading, they're making insane returns. You can make a really high return, but gold and silver and kind of like the classic commodities aren't really getting as much of a return. I think silver is actually beating gold as far as appreciation lately. So yeah, you're not really going to be getting as much as the appreciation, but it's going to be putting your money or your cash in something that doesn't lose value. Right, so basically the way I think of commodities is if I have some cash that I kind of want to keep, but I don't want it to lose value, I will just put my cash in some Bitcoin, or I'll put my cash in some gold or silver. And I hope to one day really buy maybe an oil rig and really get into the oil commodity game eventually. But yeah, guys, the commodity oil asset class is very simple. This is one of these asset classes that you're probably gonna do later on in your investing career. It's not really something I would recommend for someone that is new at investing. It's going to be somewhat for a more mature investor that's really trying to diversify. He's already got 1 million stocks in his paper assets. He's already got 1 million in real estate. He already has, a company that's doing 1 million in revenue. So he's like, why not? Let's get some commodities, let's buy a Mercedes, let's get some gold, let's get some silver. It's, you know what I mean? That's the way I look at commodities. A lot of people would argue. But yeah, commodities are a great asset class. I also invest into commodities, but I want to get into them more. Now, another reason why I like commodities is because they are liquid, right? Like for Bitcoin, for example, I could just sell my Bitcoin and get my money almost instantly, kind of like a stock. Even if you're investing in maybe like a gold ETF, you can invest into someone that is just a gold ETF, which is just a bunch of gold companies, right? You can sell that immediately. So there's ways that you can invest in commodities that are still extremely liquid and still give you that functionality to sell and get your cash immediately if needed. Alright guys, but that's going to be it for today. Please like, subscribe, leave a comment below if you have any questions, or maybe there's something that I missed, and maybe tell me about your investing experience. Which asset class are you going to choose to invest in first for your journey to financial freedom? But thanks guys for stopping by, and y'all have a good one. Take care.